In this presentation, we're going to enter an expense transaction into our system with the use of bank feeds. In other words, we've already entered the data into the bank feeds. It's kind of in limbo. It's in Sage limbo now. And now we're going to take it and add it to the financial statements. Get ready because it's time to engage with Sage Business Cloud Accounting. Here we are in our Get Great Guitars practice company on the summary page within Sage. We're going to be opening up the banking information. I'm going to do that by going to the banking item in the top ribbon. Then we're going to be opening up those transactions that we have imported. There's 13 of them at this point. I'm going to look for a common kind of expense transaction. That's where we're going to start off with. Is it going to be a common type of expense transaction? As we scroll through these transactions, I'm looking for the one for Edison, which is going to be our utility company. So I'm scrolling through here looking for Edison. Here's the one that we want. That's going to be basically as straightforward as we can have it for a practice kind of transactions. So the transaction hasn't been included. We have Edison not in basically who we paid. It's not really listed here as a vendor. It's a reference, which is kind of like a description column. So we need to add it here if we want it as a vendor, and we're going to have to add the account, which is going to be, we're going to call it a utility expense. So just to note, as we do this, I want to take a look at the financial statements as we go. So I want to open the financial statements in another tab. And this is going to be the common practice that I would recommend doing as you work through this accounting system. And that is to have multiple tabs open, including the financial statements, so you can bounce back to them and check them out. So I'm going to be right-clicking. I'm going to go to the tab up top, hover over it, right-click on it, and we're going to duplicate this tab. Common kind of procedure to do this if you're not used to this with other kind of cloud-based accounting system or database programs. Very useful. Then I'm going to go to the accounting at the first amount, and that's going to take us back to the summary page, where we can then go to the reports. I want to open up our favorite kind of reports here we're going to be dealing with all the time, that being the balance sheet and the profit and loss. So I'm going to be opening up the balance sheet report. And then as that opens up, I'm going to once again make another tab and open up the income statement. So I'm going to right click on this one, open up another tab, duplicate this tab again, and we're going to then open up the income statement or P&L. So I'm going to go to the reporting dropdown and go to the profit and loss, otherwise known as the income statement. Same report, different name. So there we have that. So then I want to go to this year. I'm going to say this year and calculate this. So I just want to pick up the data, which is going to be in 2020. Notice that we don't have anything thus far, even though we've entered the bank feeds either here on the income statement or on the balance sheet. Then let's go back to the bank feeds, which is now on the first tab, and we're going to be adding this information to it. Now note, this is the amount that came through for the bank feeds. It's in limbo right now. It's not included in the financials. It's at the 620. We could then have a couple options here. We could add it with this little short adding field, or if we were to add it like in the normal accounting system and see it, then we'd have to match it up. We would match up what's already in the system. Obviously, we have nothing, so if I hit match up here, it's gonna try to pick the transactions out that we can match out to it. Now, obviously, we don't have anything matched at this point because we're entering this and relying on the bank feed. So remember, the two kinds of ways you could have this is that we enter the check first, even if we're on a cash basis. Normal accounting system would be that we entered the check, or whatever the payment was, pretend it was a check, and then when it cleared, we would be matching it out to the bank, and that would be a double check. Or we can be completely dependent on the bank, which we're kind of basically doing here, waiting until it clears the bank, and then creating the transaction when it does. Let's take a look at the first kind of method here. Let's pretend we're going to go back in time and make the transaction, write the transaction on the books first, and then come up to speed up to here where we would then receive or see the transaction clear the bank and therefore use the matching field. So in other words, I'm going to make another tab up top again. I'm going to right click on this tab and duplicate this tab. So instead of just creating the transaction, I'm going to show you what it would look like if we had the transaction already in the system. I'm going to go back to the accounting. And so we're going to go back to the home page or the summary page. Then I'm going to go to the plus button in the upper right. So the plus button in the other right, and we're going to have payment, and I want to take a look at the other payment. So I'm going to go to payments. I'm going to say other payment. And then I'm going to put in the vendor. I'm going to add the vendor. So it's going to be a new vendor, which is Edison. So Edison is going to be the new vendor, and paid from the bank. It's going to be coming out of the checking account. So it's coming out of our checking account. Method could be a check, or it could be an electronic type of transfer. We're going to say the date of it. I'm going to say the date of it is the same date. I'll keep it at March 31st. So we're going to say 3/31. We'll keep it as the date. And then the amount was for the 620, 620. So there we have our transaction. And then down below, we need to choose the account that it's going to be going to. Let's see if they give us a utilities account. This is basically the default chart of accounts that was provided to us. And there it is, utilities expense account 6400. That's going to have the full 620. What's this going to do when we record it? It'll record our side of the books, which will decrease the checking account, and it's going to be increasing the expense, the utilities expense. Let's go ahead and save that. It's asking me to add Edison as the vendor, so I'm going to add Edison as the vendor here. And I'm just going to use the vendor name to pay out Edison. So then we created that successfully. I'm going to save this again. Now, if we pay by check, then we have the option down here for the check number. I'll write the check manually, and you can put the check number in, or I'll print the check. If you're going to print the check, then you're going to have the pre-printed checks that you would have to put in the system. I'm going to put a manual check in here now. I'll print the check later, so I'm going to say confirm that. So now within the checking account, we have a negative 620. We didn't enter the beginning balance. We're going to have to deal with the beginning balance later, but now we see the transaction recorded. Let's bounce back over to our reports. Let's go to the balance sheet report, and I'm going to calculate the balance sheet report again. And now you see the checking account has a negative because it's overdrawn, the 620. The other side is going to be down here in the equity section, right? Because it flowed through the income statement, or P&L. If we go to the P&L, or profit and loss, and we calculate that numbers, update that one, then we see that we have the expense down here of the general expense of the 72,000. Now I thought I put it into utilities, so let's go into this transaction and see if we can zoom into it. There it is. I'm going to select it again and see if we can drill down to the actual check. And then here's the actual check. Now it's going into that 72. I thought I put it into utilities, so I'm going to try this again. Let's put it into utilities and see if they let me change this. We're going to say I'd like it to go to the utilities expense is the one we want. And then save that. Then I'm going to go back up top and go back to our P&L report, the profit and loss. And so there it is now. Now we're in the utilities expense. Now let's go back to the bank feeds. So if I go back into the banking information all the way back to the left, let's refresh this report. I'm going to update this report. And then I'm going to scroll back down and I'm going to see if I can find that Edison once again. So we're looking for Edison. So there's Edison. And now if I go into the match field, I can go into the match field and there's that 620. So we could match this out by saying, hey, look, there's the 620 that we would like to match out. And if that were the case, then we could simply match this transaction. So that's one way that you could see this. That would be like the full service kind of way. We would actually enter the transaction on our side and then check it to the bank. Now, the other way we could do this is to create the transaction. So let's say I'm going to say that we don't want to match it now. Now we're going to do it the other way. We're actually going to create the transaction right here instead of going somewhere else to create that transaction. But it's useful to know how to create the transaction in the other location. So what I'm going to do then is I'm going to go back to this tab. I'm going to go back to the summary. So I'm going to click on the Sage again, get back to the summary page. Then I'm going to go to the banking information, go into the banking information. I'm going to delete the transaction that we just did so that we can then enter it again straight from the bank feed. So here we have the 620. I'm actually just going to click on that 620, and then it'll give us the activity that is in the system. So that gives us our bank balance up top, and then down below is our activity. Now I'm going to change the date range activity to include March. So we have it included in March here. Then here's our transaction for the 620 for the Edison. And the type of payment is this other payment. That's kind of like the form. That's the form type payment. It's useful to know to note that, because that's kind of like the driving kind of form that you'll see in the detail when you look at these kind of payments going out. So I'm going to select it, and then I'm going to delete it. So I'm going to select that item, delete that item. Are you sure you want to? And I'm going to say yes. Let's delete that, please. And it says it wants us to delete it directly from the check register, so we'll go ahead and do that. I'm going to go over to the check register then. And we'll do the same process. I'm just going to check off this check, and then I'm going to delete the check. We can delete it or we can void it. I'm going to delete it for our example here. And so I'm going to delete the check. So we're going to say, yes, please delete the check. So it has been successfully deleted here. Then I'm going to go back to the reporting up top, take a look at the profit and loss. So we're going to go back into our P&L to see that the check should now be removed. It's going to be, for this time period, we're back down to zeros. If I go to the balance sheet and refresh the balance sheet, then we should be back to zeros there as well. So I'm going to recalculate on the balance sheet here, back to zeros. Then if I go back to the first tab, there's going to be our 620. Now again, we can add it just simply this way. Here's Edison. This would be typically how you would add it if you're kind of relying on the bank feeds. I could copy the reference, or at some point in the reference, that'll usually be a vendor in there. We can add the vendor as we go. So here we already added it before, but we can add it if it wasn't there. And then we could select the vendor. And then we could say the format. Again, it could be check or some other type of format. So it might be an electronic transfer. The bank feeds work really well with electronic transfers. So if you were to pay things electronically, that would be a good way to go. Let's go ahead and pick that this time. I'll say electronic transfer. And then the other account, it's going here to the 72. And I think that's because I messed up and put it there the first time. Or maybe that's the default account. It needs to be going to utilities. So we're looking for the utilities expense, which is the 6,400. So I didn't pick it up there. We want the 64, that one. I want that one. Okay, so there it is. Now once I create it, we'll basically create it on this side, which is the same kind of payment type of form we did before. We could, in essence, make the electronic check here, or the electronic payment, which is similar to, or we could make a check right from the screen. So I'm going to go ahead and create it then. So now we've created it that way and taken it out of limbo and put it into the book. So those are the two ways you can do it. If it was matched, that means in essence you're not making a new transaction, you're matching it to an existing one, for at least for the expenses. We'll talk about invoices matching later, but and then on if you make it, that means you actually made a transaction on the book side of things. So if we go to the profit and loss and we update this again, let's calculate this. It should be back. We should have the 620 is now back at the utilities expense. If I select that and go into the detail for it, we're going to see the detail. And note that within the type, it's still an other payment. So note we basically made kind of the same data input form. We just did so with a different data input screen. If I click on it, we still get to that same data input form. Notice this is all the same, except that I didn't have the method was a check before, but it's the same form. And that's kind of what I want to point out. This form is driving that transaction, even though you're entering it into a different screen. So then if I go to the balance sheet and we were to update this report and calculate this, then it would be back again up here. So here's the checking account is now negative. We'll have to deal with the beginning balance. We'll do that later. The other side is going to equity. So what's happening here? The expense went up on the income statement side. It rolls in to the equity section of the balance sheet, and so this equity section is actually listing out the P&L, the profit and loss that's going into it, and then at the end of the year it'll roll into basically retained earnings. So that's how the bank feeds work in general. And now we're gonna go through here and continue doing this process and continue adding these accounts. Now note as we go, sometimes the system will actually be able to memorize some of these accounts. So as we add the accounts, it may be easier for the system then to memorize some of them, making our process even more automated and easier to work with. So that's it for now. Let's get out of here.